Are you ready?
Ready.
All right, let's go. Kevin here, top 1 financial advisor and best-selling author. We are here to talk about the stock market. Fed Chair Jerome Powell has been talking today to Congress, and this is a regularly scheduled semi-annual event, so it's twice a year. And he gives updates on what the Fed is looking at, what they're trying to do, and how well the economy is going. This is important because there is a famous phrase in investing where you don't fight the Fed. Whatever the Fed is doing, you should invest and do things that are conducive so that you're not going against the all-powerful Federal Reserve. Now, let's quickly talk about what was talked about, what do we expect, what he said, and then what all of this stuff means. Now, quick refresher for those that may be new. We've had a lot of subscribers who have joined the channel in the last month or so. Thanks for being here. Continue liking, subscribing, and commenting, all that kind of stuff. But here's the thing. The Fed controls the money, and when you control the money, and more importantly, how expensive money is, you can have an impact on the stock market. When you cut rates and make loans cheap, people can borrow, they can get cars, and most importantly, companies can borrow to hire more employees, to invest more, and to do more stuff. This usually boosts the stock market. The opposite happens when they raise rates, which is what the Fed has been doing, and they've done this 10 times over the last 18 months or so, with the exception of last month. They said, look, we are going to pause and assess and see what happens, which is also what he said today. He also mentioned, and we talked about this before, that he does expect at least 2 more increases for 2023, and those increases could be around 0.25%, also known as 25 basis points, or 1/4%. All those things are equivalent. The reason why he comes out and says all this stuff, because there have been questions around this as well, is like, why are you talking so much, right? Why are you just, every week, it sounds like you're saying something and the market reacts. The reason is it gives us a blueprint on how we should be investing. It also calms down the stock market a bit because you know right now in June that we probably are going to see 2 more rate hikes, and you know it's going to be 0.25%. He also said the next one could be in July. So that is all out there. Here's the other thing that you need to know. There's a reason why they had to pause, or why they did pause. He said, he used the word prudent to just sit back and observe. But remember, because there are a lot of people complaining left and right about what the Fed does or doesn't do, remember, they were raising rates earlier this year and we saw major bank collapses and all of y'all were scared. Y'all remember that? SBV crashed, and then it was Signature Bank, and then some stuff happened overseas, and everybody was panicking. We did a whole video series on FDIC insurance, and we had talked about how safe your bank is or was not. This is why we're going to sit back and pause and say, look, let's assess what is going on. Let's see if any more banks, falter, and then we can make some moves after that. And again, by saying there's only going to be 2 more, that helps banks adjust their portfolio and say, look, if we can survive 2 more hikes, we're going to be fine for 2023. Also helps investors to say, look, this could be over after 2 more hikes, and we can start to evaluate and adjust your portfolio from here on out. That's the reason as to why they lay all that stuff out. Now remember, none of these things are a guarantee. That is because we can find out that unemployment takes off. We can find out that we hit our goal early and inflation is already down 2% and everything's fine. And then we could be done, right? So I doubt those things will happen, but those things could happen, and that's why these are maybe and expectations at this point in time. So that's pretty much all that happens. The next thing for you is, number 1, he is going to speak again tomorrow, so the markets could be a little jittery. We'll see. I don't really care what happens in a single day in the stock market, but just so you know. And then the other thing is, what should you be doing with your portfolio? Now, the last 2 days, we've talked about some adjustments that you might want to consider making, how to make those adjustments, and what area the stock market is moving. That's already out there for you. What I think is happening is now knowing, right, that they're going to raise rates 2 more times and that we are expected to see a cut in 2024. Jay Powell didn't say that. The banks, JP Morgan, Morgan Stanley, all of them, they expect a rate cut in 2024. This is saying that, hey, tech stocks are doing well. They might do extremely well. They're already doing well this year, but it could continue in 2024. And people are shifting more towards tech because if inflation is going down and interest rates, we see the end of it, at least we think, then I don't need inflation resistant stocks. I don't need stocks that do well in an interest rate hike environment. So people are leaving those investments and going to things that are the opposite of that, and that is tech. That doesn't mean that you have to sell out of those older, safer investments. but you can. Or the way I would say is just to tailor your expectations. When you are watching people making 100%, 50%, 75%, a lot of these tech stocks, you could be sitting in something like Smucker's and get 2 or 3%. You might get a solid dividend, but again, those dividend stocks are not as sexy as what they were last year when everybody needed some level of profit. So just know that. Just know that. And if you don't have any tech, you might want to add a little bit. I brought up several examples. I gave you 5 stocks that are off the radar. I gave you ETF yesterday to look at and some adjustments that you can make to your portfolio all just this week. And I feel like, what's today? Tuesday or Wednesday? Today's Wednesday. So I've done a lot already. So those are things that you do want to consider in terms of what's going on. The Fed speaks tomorrow. Jay Powell speaks tomorrow. I think I mentioned that earlier. We'll come back and see if he says anything that's important or new. We will cover that. If not, then that's all we need to discuss. If you do have any other questions, feel free to let me know in the comments below. And that's it. I will talk to y'all later. Bye.